Welcome everyone for the first session of Wealth Academy. I'm here with Kyle, who is a longtime investor in both Web 2 and Web 3. Some of you may have already seen some of his content. He is also, since a while now, becoming very active in looking at private markets and is one of the co-founders of Wealth. And I'm here with John as well, who is a trader by nature, sports bettor, and just somebody who knows how liquidity flows and how to make money in all sorts of markets. Crypto has been his focus for the last sort of 5 years, but also for the last 24 months or so has been getting more and more involved in private markets and has, through Wealth, become very engaged in private markets. So we're going to talk to both of these guys today about specifically pre-IPO investing. Like, why is it a good idea? Why is it better than buying public stocks or equities, gold, silver, and any sort of crypto, for example? So yeah, let's dive in. Kyle, I wanted to ask you specifically, like, what is the fuss around pre-IPO? It seems to be a lot more in vogue than it ever was, and a lot on a lot more people's radars. Why do you think that is?
Well, it's because you have the biggest private companies in the world staying private for longer than companies used to in the past. And so in the past, when a company would get to like $1 billion or $2 billion valuation, maybe something like that, they would go public. And so then you still had, for example, when Tesla first went public or Nvidia first went public, like if you had entered those companies at their IPO and held them till today, like it would have been the best trade of your life, for anyone. But now that there's so many companies that are being valued in the tens of billions or hundreds of billions, or now the three mega companies this year that are going to go public, Anthropic, OpenAI, and SpaceX, valued in the trillions. People are wondering, how much more upside there is in these, but maybe less so that question, more so in the realization that if you would have bought into these companies, like, for example, a year ago, you would have outperformed any type of investment in the S&P, or even like what's the best thing in crypto? Hyperliquid. You would have outperformed Hyperliquid. Anything really, gold, silver, everything you would have outperformed by orders of magnitude. So, and the stock market has just been ripping. It feels like it's going to go up forever. If it does or not, who knows? But we are seeing these really high growth AI and kind of AI kind of proximity types of projects. So quantum, energy, AI, and then defense companies powered by growth by AI. So all of it's like AI centric and powered, allowing this kind of hyperscale mentality and hyperscale growth, like Palantir, and you've got, all these other guys just exploding into tens of billions or hundreds of billions of dollars of valuations. And really, it just, people didn't really know it was possible before. I did, though, and like, this is one of the reasons why I wanted to start Wealth and so passionate about what we do, is because I was in this position, like, gosh, it's 2026. So, I mean, I started looking at this stuff 10 years ago through Bank to the Future. And that's what allowed me to get into Coinbase and Kraken and Ripple, Securitize, Circle. And a lot of these haven't gone public yet. They haven't been as hyperscale growth as some of these other companies now and today. But, but they were certainly amazing opportunities. And now that's what you're seeing on what we're building here. So it just front and center, robotics, AI, everything is booming. And these valuations are skyrocketing super fast, revenues coming in like crazy. And everyone realizes that this is the future. This is where all the money's going.
Yeah, really good. I mean, you sort of touched on it a little bit there, but early investors in Google, I think Sequoia was a good example. They put around 12.5 million at 75 million valuation. And the IPO for Google was famously at 23 billion, which seems like a ridiculously low number in today's terms. I mean, it's staggering what's going on, but that was a 300x return for them. And then retail investors were coming in at the 23 billion mark. We know where Google is now, so it was still a good buy at that stage. But John, can you talk to us a little bit about how startups and how VC investing works from seed, Series A, Series B, Series D, and then getting to the stage where we're at now with some of these private companies, which they've been aggressively raising for a couple of years now, but still staying private. And what's your thoughts on that for investing? There's different levels of risk, obviously, and things like that. So, what do you like to look for, and how does that relate to what's happening with the Wealth app?
The companies that I've been looking at are mainly blue chip companies. So I haven't really looked into a lot of the lower level companies that are kind of at 1 million, 2 million, and then they kind of go through a seed round, Series A, Series B, Series D, and carry on going. A lot of the stuff that I've been looking at, as I said earlier, I'm quite new to pre-IPO investing. Kyle's been doing this for many, many years, but the stuff that I've been offered, I thought that I was coming in quite late. Like SpaceX, I think I got in at a 450 billion valuation. And at the time, the one concern that I had was, like, will Elon even take this public? Why would he want to take this public? He could just keep on doing another round and another round. If I would have known factually that he was going to take it public, I probably would have had a much bigger shy, because who doesn't want to own a piece of arguably the most powerful man in the world's company? I watched Kyle's video the other day on where and what he thinks SpaceX could become in the next 3, 5, 10, 15 years. And generally, I'm quite a short-term investor when it comes to any investments. I kind of like to get in at a good entry, and then, whenever I'm in profit, kind of exit. But I think with pre-IPO, if you do your research before and you look what these companies could potentially be, it's super exciting being in these companies before they go list on the Nasdaq or S&P or wherever they're going to list. So anyway, you asked me quite a few different questions. Which were the other ones, sorry?
No, it's fine. You pretty much answered it. I suppose a question back to that, based on your answer, is do you feel that you got in at a good time for SpaceX and also Anthropic or any other investments? And can you explain a little bit about how that worked and how you did it?
Yeah, so when I first got offered SpaceX, it was on the Wealth platform. As I said, I didn't really know much about it. I didn't know how to put a valuation on it. I looked at other companies that were trading on the Nasdaq and S&P, and I looked at a valuation of 440 billion, and I thought to myself, like, how does anyone actually put a value on this? But the more that I kind of looked into it, and the more that my brain was telling me you need to own a piece of this company, the more I got excited about it. So getting into SpaceX at 440 billion at the time felt very scary, but now it's listing, or the IPO price is going to be at 1.75 trillion. I've got like absolutely zero intention of selling. And will the price come down? Yeah, maybe it'll come down. I mean, most of these pre-IPOs have a 6 month lockup. Elon already came out publicly and said that he won't be selling anything for at least a year. So he's given his word to the public that he won't be selling anything. But I think this is just like the sort of company that you want to hold on to for 5 years, 10 years, 15 years and see where it can go. And the thing that I like about pre-IPO is I remember very, very clearly when Facebook launched on the S&P. Was it S&P or Nasdaq? Kyle, can you remember?
Nasdaq.
Where is Facebook trading?
Nasdaq.
Nasdaq, yeah. Sorry. So when Facebook listed on the Nasdaq, I remember clearly James saying to me, my brother, that he's going to be taking a big position at $15. And I kind of looked at the valuation. I was like, dude, you're paying an absolutely astronomical price for this company that has no earnings. They're just, a social network, and like, how are they ever going to generate any revenue? And the point that I'm trying to make is, if I was involved in pre-IPO from say $6 and it would have launched at 14, I would have been happy to just let it ride and see where it goes. But I think the same applies for SpaceX. If I wasn't in SpaceX pre-IPO, I don't think I would go out and buy 1.75 trillion or 2 trillion wherever it lists, because you kind of feel like you might have missed the boat a little bit. And then you look a few weeks later and it's like, oh, it's at 2.5. Let me wait for a pullback. So I think the nice thing about being in pre-IPO is you're already in. You've kind of got your ticket. You've got your ticket to the movie, and you can just sit back and watch it play out. Whereas I don't feel the same way about crypto investing, especially like everything we've seen in the last 3-4 years. If you get involved in like a ICO and the token launches, you never really know what's going to happen, because you don't really know the ins and the outs of what's happening behind the scenes and who's involved and who's selling. And it just feels a lot more comfortable to sit on something like an Anthropic or Tesla or Uber, or one of these companies that people manage to get into early. I think you can kind of sit on them with like a 5 to 10 year outlook, and sleep well at night, not worry, and just see where these things can go.
Fun fact, real quick, is so today Morgan Stanley came out, and keep in mind, they're just like any other crypto KOL shilling a token before the ICO. Morgan Stanley is one of the lead sponsors on the SpaceX IPO, so they're shilling their bags just as hard. So keep that in mind with a grain of salt. But they did come out and say that they believe, their projections are that SpaceX will be doing $3.4 trillion of annual revenue by 2040. In my SpaceX video that John mentioned on my new channel, the Chasse report, I built a case by 2035 saying that they'd be doing about $800 billion of revenue, excluding what I called the frontier section. The frontier section is the things that we can't even comprehend how big they will be, but like they're in the plans, kind of things like the moon base, the Mars base, kind of like asteroid mining, all these kind of like frontier things that aren't in the core business model at the moment right now. But if you think about them doing something like someone else, I think I was watching, like these companies are trading between 25 to like 40x revenue. So, if something like Anthropic, for example, hits $1 trillion in revenue in the next couple of years, right? They're 80x growth right now. They're on track to do like, they're probably going to do 100 billion this year in revenue. Maybe they do $1 trillion in the next year or two. That puts them at like a $40 trillion valuation on the public markets. And for SpaceX, my valuation number was somewhere between 20 and 30 trillion by 2035, depending on, kind of the revenue. But when you think about these numbers in the next 10 years, Anthropic probably even sooner, a lot could go wrong, I guess. But like the trajectory that they're on right now, it does seem like there still is some upside in these. But it does give you time to think about these things too when we're in it sooner. We've been since we bought Anthropic on the Wealth platform and we bought SpaceX, both of these things, like, I don't know, 9 months ago or whatever, whatever it was, been thinking about kind of, would we sell them at the IPO if we had given an opportunity or not? And so, it's given us a lot of time to do some research and actually also to see them grow. Like when Anthropic was on the platform, it still was not nearly as good as OpenAI. I remember making I don't think it was an X post or talking about it in a video, saying that I had just invested in Anthropic, and I did it because I was like supportive of Dario's kind of safety first perspective, and then also when the Pentagon kind of blackmailed them. That was way more recently, but still, they weren't quite as popular, and they've only been crushing things like the past 4 or 5 months, and that's when everything just totally exploded, but insanely exploded, crazy.
What did you say that they were expecting the revenue to be? Did you say 1 trillion?
For Anthropic?
For SpaceX.
Morgan Stanley said 3.4 trillion of annual revenue by 2040, which would put them at like a $100 trillion valuation by 2040.
Yeah, I mean, if you look at Tesla, it's trading in a PE of like 250.
Is it?
And then yeah, it's trading in a PE of 250. And then if you look at like a whole lot of these other ones, Nvidia 70x, Apple, I think it's at like 25 or 30x, Microsoft 45. So, I mean, if that's the case, even if they're making 1 trillion, then, that'll put this at a valuation of somewhere around 50 trillion. So, yeah, listen, there's two sides of this whole debate. A lot of people are saying that SpaceX is, completely overvalued, and people are just buying into Elon Musk, and people aren't looking into what they're really buying. And then there's the other side of the coin, which is like the fence that I'm on, that thinks this could be and should be the biggest company in the world. What is your take on comparing this to this whole kind of 9-month period we've been going through now to the .com bubble? I mean, if you look at the other day, Jensen came out and he mentioned a company called Marvel, and he said, hey, I think Marvel is going to be the next $1 trillion company. It's just one guy, like he made a statement, and that day Marvel was up 30%. Like it almost reminds me a little bit of the kind of altcoin season we would go through, where like one of the big influencers would mention a coin and you would look and it would be up 200%, or the .com bubble, where basically every single thing was just shooting off, and then kind of everything comes down and only the like real blue chip ones like survive from the dust and then go up 10 times higher than they were originally. Do you kind of have the same mindset here, thinking this isn't sustainable and it's all going to come tumbling down, or do you think this AI tech run is something completely different that no one's ever seen?
Well, I think a lot of the people that I think are probably smarter than myself, who I listen to often on podcasts and things, think that as AI gets better, the demand for it increases, and so like actually I guess, like, I mean, I would have thought this, and my guess is that most people also think like this, that Anthropic's growth is actually due to new customers, but it's actually not really. Like the revenue growth is actually largely driven by increase in demand from existing customers. So basically, like as the cost of the API usage gets more expensive, but the models get more reliable, and the teams can do more with them, they're willing to pay more for tokens and more usage. And so, the budget increases for these big companies that are using it. And essentially, this is how the revenue is increasing. So, and then people, like at some point, but to answer your question, I guess, like there is likely going to be some sort of correction, but you just don't know when that's going to be. And I mean, there'd be nothing better than being Warren Buffett and sitting on the sidelines, waiting for a massive Black Friday to come along or something and be able to soup up things. I mean, that's what all the greatest investors in the world have like really had cash on the side waiting for these things that are super bold. If you look at the stock market right now, one would say that this is like, I mean, literally, I went and bought some hype. I think it was 2 days ago at the very tippy, like literally, I can show you my hype
75
chart right
bucks or
now.
something.
It's $75. Like you can see my buy mark
Yeah.
on the top of it. And I knew, like literally, like let me did it show you? Yeah. Anyway, you guys can take my word for it, but
No, I believe you. I've seen you do it many times.
and I wanted to buy. I've even talked about it in our private group that we have. I've wanted, and I just thought, I'm going to be patient now before, and I'm going to swap my ETH for hype when like it makes sense. I'm just going to be patient, and I was patient for like over a month. I don't know, 6 weeks, something like that. And then I was like, I'm just going to every day just sitting watching that disparity between ETH going down and hype going up every single day, and I'm like, fuck it, like I'm just going to sit here forever, and it's just going to watch it forever. And then the day that I swapped, boom, that was it. I knew I was going to share it in the group and everything. I knew it was going to be the top signal. But that's how I feel about the stock market too. It's like it's just straight up. AI stocks and everything else is straight up. They're trading over crazy price earnings. But people say that intelligence is going to continue to grow and get more valuable. And there's like I heard some people on, I think it was like Peter Diamandis's podcast, like the whatever it's called, Abundance Podcast or whatever he calls it, Moonshots. He was saying that like basically there's no limit. It's infinite how much demand there could be for these AI models and things. So
Do you guys think that, listen, I don't really know much about the ins and outs of these companies. I'm not going to pretend to like, hey, like I know so much about Anthropic and I know so much about OpenAI and space. Like I don't know a lot about them. I use some of the stuff, but I don't spend hours and hours researching. But do you guys think that this partnership with Anthropic and SpaceX, it could ever cause some kind of merger down the line? I mean, it's so beneficial to both of them.
a lot of people believe that SpaceX and Tesla, and that could make sense, I guess. Like, why not those two merge? And then someone said it was a leak about that. But Anthropic, I don't know.
I think there's probably too much ego at play there for any one of them to allow themselves to be swallowed. I'm not sure if you guys follow the same way I do, but I look at these people as humans and humans with like God complexes sometimes because, you know, the valuations are getting so high. And I think sometimes that it's just a boys club competition between Sam Altman and Elon Musk and I forgot the guy, Anthropic. Yeah, yeah. And just, you know, who's going to be able to IPO at the biggest value and, you know, who's going to take the most liquidity out of the market and dominate. And for sure, there's a competition between Anthropic and OpenAI. We know that. I think Elon is a little bit the outlier because he sort of does AI as a byproduct of everything else that he does, which is super interesting as well. I wanted to sort of like dive a little bit more into the numbers because you guys touched on them so well. And that's probably one of the hardest things to get your head around when you're touching on this topic for the first time. The sheer number of zeros that get just bolted on to the end of these valuations today and how those valuations are driven. Kyle, you gave the number there of Morgan Stanley, what they're projecting revenue at for SpaceX. We're going to dive into SpaceX a little bit deeper in a second, but I wanted to point my finger at that because it is very, very hard for the average person to digest those numbers. And a good anecdote is that when we had Anthropic for the first time on the Wealth app, and we told a few of our sort of friends and sent it around in our private WhatsApp groups, the feedback was not exactly bullish. It was like, oh my God, like, can you guys get something at a bit lower valuation? Because it was $220 billion for Anthropic at the time. And we were literally
I
getting
remember that clearly.
we were getting fudded. So just go into the mindset a little bit of how you interpret these numbers and sort of paint a picture about how you get comfortable with those numbers.
I like to follow trends. It's something that I do. I know there's people out there that are a lot smarter than me, so I like to see what people are investing in. There's a lot of information out there. If we were investing in companies in a pre-seed round at a 15 million valuation, like I did the other day, where I went in, I had to do a lot more research. That's a totally different kettle of fish. But when you're investing in something like SpaceX or Anthropic, there's a lot of information out there. You can kind of go and look, you can use, any LLM and kind of ask questions. What is kind of like the prediction where this is going to IPO? You can go and look at, loads of different sites where it's already trading. Like when the other day I was buying SpaceX off Wealth, I'd already bought initially at 440 billion. And then the other day I saw it was trading at 2.1 trillion on quite a few sites. And on Wealth, there were guys offloading it, rightfully so or wrongfully so, but they were offloading it at 1.3, 1.4 trillion. So they were super happy because they're getting a 3 or 4x from their initial purchase price. So they bought in at 440 and now they're happy to sell at 1.3. And then you've got a new buyer like me who doesn't really have too much of a bias. I just want to be getting a good deal, even though I don't know where this thing's going to be in 6 months, 2 years, 5 years, or 10 years. And I don't really know how much revenue this company is going to make. All I know is that all the hype on the street at the moment is SpaceX and Anthropic. That's what everyone's talking about. Even people like my wife who knows, she doesn't spend her time reading up about tech or early stage investments. She's heard about these companies. So the point that I'm trying to make is even though I saw it trading on other sites at 2.1 trillion, those are also people that are taking a shot and they don't want to miss out on whatever price it lists at. So I saw it at 1.4 trillion, even though I was a buyer at 440 billion originally. This was still a great deal. But the person that was selling, I also don't think, oh, what an idiot. Why is he selling? Because he's locking in profit. He doesn't know what's going to happen. No one knows how the market's going to react. Maybe this thing lists and it goes straight down to 1 trillion. And then he's now all of a sudden got capital that he sold his at 1.4. He can now go buy it back. So there's definitely different ways of investing. But getting back to your original question, which was how do you determine if things are a good deal, or how do you, kind of put your mind at ease when you're dealing with all these big numbers? For me, it's just about if I think I'm getting a deal on something, everyone's got different ways of investing. Someone like Kyle might, love the idea of a shield company, or he might love the idea of, an early stage energy company, whatever it may be. For me, when I'm investing, I'm just looking at, am I too late? No, I'm not the last person getting in. And does this thing have enough traction to take this higher and higher up? And if the answer is yes, and I know that I'm not the last person getting in, then generally that's enough for me, especially if I can see it trading in other places at 20, 30, 40% higher. Anyone that's trying to do like a full deep dive and technical analysis on any of these companies, all the information is publicly available. You can spend hours and hours, you can spend days doing research. And I would highly suggest doing that. But for people that don't have time and maybe they don't feel like they've got enough insight or knowledge to understand the stuff that they're reading, then there are other ways. You can just kind of see, where it's trading on other platforms or where it's predicted to kind of IPO. And that sometimes is enough information. to make a decision.
Guys, as we're recording this, SpaceX is due to IPO in the coming days. Probably when you're watching this as a viewer, it actually is trading already on the stock market, stock exchange under SPCX, I believe. Now, this is like quite a monumentous time in general for IPOs or pre-IPOs, as we've talked about. What we've been doing on Wealth for the last 12 months has been getting some of these more famous private companies onto the app, and what John said, allowing users to come in and participate at what have turned out to be good valuations. It was never known at the time where things are going, and investing is like that. It's literally always risk involved, especially with markets that are unfamiliar, and especially with things that you're not an expert in, right? So you can manage risk in different ways. What we have done at Wealth was work with top level private market brokers who we allowed to do the hard yards. And if they're investing in companies at certain valuations, then we felt it was safe, in inverted commas, enough to allow that to be accessible through the Wealth platform. So that's really how we've followed suit. Like John mentioned, SpaceX was available several months ago for 470, I think it was, billion. Anthropic came on at 220 billion. SpaceX is just about to IPO, and I must mention that it's not apples and apples if you say it's going to IPO for 1.75 trillion, which is the number. But don't forget they've merged with XAI. So if you factor in XAI's value, the valuation of the SpaceX that you would have been holding on the Wealth platform would be 1.4 trillion. So it's still a good progression in valuation over a shortish period of time. It's not crypto levels of X's, but it's very, very, very powerful, especially if you're used to traditional markets, traditional investing. Anthropic, 220 billion, and they just recently did a round at 965 billion. So there's been already quite a bit of appreciation there. Now, my question to you guys is, if you're sitting now with the option of Anthropic at 965 billion or SpaceX at 1.4 trillion, which one do you want to have more, is my question, and give your reasoning. I'll start with you, Kyle.
Anthropic, by far, because it's just the most likely to hit a higher valuation sooner. I mean, if I could buy Anthropic right now at 900 and something billion dollar valuation, I would probably put majority of my net worth into it.
Wow.
I mean, they're on track to do 100 billion this year. So if you look at 100 billion times 50, what is it? A 50x multiple? What are you getting? Or like even. So yeah. I mean, that's kind of that's not like, but they think I mean, I don't know, like a lot could go wrong, I guess, right? A lot. I mean, some like I guess a lot could go wrong, but they're just on such a good trajectory. I would put a lot in if I can get in right now at under $1 trillion or $1 trillion. I would put a lot of money into it. I think about like I literally thought about this like I don't know, a couple of nights ago before laying in bed, it's been like I can't, like, why didn't I just buy the whole fucking lot on Wealth, like when we had like the whole ticket of Anthropic? Like why did I just buy all of it? And it's hindsight's so easy to say, like, why did we just do this? And you asked earlier, like, how do you know about the valuations and stuff like that? And when we had Anthropic listed at whatever it was, 220, it just wasn't as popular and as in demand. You maybe if you were like it would have been so hard to know just how popular it was and how in demand it would be because of the coding side of things. Most of us who are looking at these things are using the non-coding side of these AI models. And so, we were all thinking OpenAI was so much better than the lead it's still and stuff like that. So it kind of gets the valuation it deserves, I guess, in real time as it's being priced and as it's growing, but I would take Anthropic, I guess, just because it's going to take SpaceX has a lot of stuff that's coming, coming soon. It's a lot of stuff that's kind of, I would they do have a monopoly on a lot of things here though. So there's a lot of stuff that they have. And it's just a matter of time to get that revenue through the door. I don't think a lot of it's not going to take so much time, but they don't have the kind of exponential growth revenue that, I think that if it merges with Tesla, because Optimus is going to be a huge revenue stream, probably as soon as they can start rolling out these million Optimus robots at 30 grand a piece or whatever, that's going to be massive revenue. But anyway, yeah, that's a long-winded answer to your question.
My answer's a little bit different. I would go with SpaceX, purely because with Anthropic, I have a little bit of fear that there's a lot of competition. They've got OpenAI, you've got DeepMind, you've got XAI, Meta AI, Cohere, X21 Labs. Like any of these guys can develop, Chinese models, and any of these guys can develop something that's slightly better, and then they can get attention because of this new thing that they've got. And that's my worry with Anthropic. I don't think SpaceX has got any competition. It's just kind of so that's my reasoning. But a funny story about Anthropic, I remember very, very clearly when Tim put Anthropic in one of our kind of whale / friends / whatever group you want to call it, where we've got a group of 50 guys in there that are all sort of OGs and super trustworthy, and we can kind of all cry in there and talk about ideas and laugh at each other and whatever it is. One of the guys, he was like who would want to buy Anthropic at 220 billion? What is your upside? And at the time, I guess I was kind of thinking the same thing. I just bought SpaceX a few weeks before at 470 billion, and I'm looking at Anthropic, and I'm like, look how much competition these guys have, and what happens if, in the next couple of weeks, this is just some kind of AI bubble, and these guys are doing a bit of a cash grab and raising at a stupid price. And there is some kind of argument in saying that buying today at 970 billion or whatever they just did the last raise at is actually a better time to buy than when I bought it 220 billion, even though it's 5x. Even though it's 5x more expensive now, your risk is very, very low now. Whereas 9 months ago when I bought, it was kind of like, well, yeah, this looks cool, and they are doing great things, but I don't think their revenue was publicly available at the time, and it was all a little bit of a guess at the time. So I don't think rushing into these things at these super early stages, when you hear about people that got into SpaceX, 100x lower, and people that got into Anthropic at, at a valuation 20x lower than this, they were taking a super big risk. And I can also guarantee you those same people have written 100 checks and 90 of them have gone to zero. So it's not always a great thing saying, we need to get in at a seed round. I think getting in at a Series A or Series B or Series C, those are very often a safer investment than getting in super early.
And that's kind of what pre-IPO is literally all about. It's we're majority of what's been offered on Wealth so far is expected to go public, expected to have liquidity soon, and you're not going to get that in seed round or usually not even a Series A anytime soon. But look at me and what I talked about before. I think I was in Coinbase Series A or something, Series B maybe, and that was in 2018, I think, or something like that. I did that, and so they just went public 2 years ago.
Yeah,
so
7
I had
years later.
yeah, I had to sit there forever, right? And it would have been better just keep my money in Bitcoin. But still, like, so that wasn't even really pre-IPO stuff. None of those things were even thinking about an IPO at that time. You know, it's not like the market that we're in today, which is what wealth is trying to kind of curate, is like things that potentially are kind of likely to go public in the next year or two, maybe longer, but like that's the thing, is like there's much less risk in these things that are being offered, not risk free, obviously, but less risk than super early stage investing. And I think a lot of us we're so tired of very early stage investing and these 99% of them going to zero that, 2, 3, 4X's in a year or two sound quite nice.
So just on one of the notes that Kyle said a few minutes ago, when he said that he would love to buy as much Anthropic at 900 billion, call it a trillion, as he could. I think it would be super cool if Wealth could integrate an offer system, because I can almost guarantee you there's loads of people that bought into that 220. 220. These numbers are so hard. Like, I keep on wanting to say a million, but guys have bought into the 220 billion round, where if they saw an offer in their inbox now, Kyle Chasse, he wants to buy $25,000 of Anthropic at a 750 billion valuation. They've done like a 3 or 4x. They're super happy. Kyle's super happy because he feels like he's getting a good deal as well. It's the same as me. I'm sitting on 9 or 10 deals from on my Wealth app, and if I received an offer in my inbox for one of them, maybe it's Synchron, which is like a robotic brain company, or whether it's for my SpaceX or XAI or Anthropic. If I saw an offer and it said, "Hey John, you've got an offer of $15,000 for your Anthropic," and I paid $3,500, I might consider selling. So I definitely think it's something we should speak to the devs about and see if we can integrate.
It's coming. It's coming. It's coming. Yeah. Incidentally, there are no slices of Anthropic available for sale currently on Wealth, and I guess that's because of the sentiment Kyle just talked about. And there's not a lot of SpaceX available, to be honest, but there is still some interesting deals on there. So I'm interested to see how things play out over the next couple of weeks once SpaceX is live and trading, which direction it's going, and if there's any interesting opportunities then arising on the Wealth marketplace, and if you can pick up a good deal there versus what's happening on the stock market. So there's interesting times coming for Wealth. This is the first time. Well, it's not the first time, because there's two that recently IPO'd, but we're in that first wave of IPOs where we can see how these private market companies have performed whenever they've IPO'd. So it's super interesting. I would love to actually just quickly touch on how you guys see the Wealth platform as changing the system that we've had before, and whether or not you guys would actually even be really participating in the private markets in this way if it wasn't for Wealth. Can you give a little bit of insight how that experience has been shaped for you by Wealth in the last 6 to 12 months?
Okay, I'll go. Yeah, so for me, Wealth, in a way, I wouldn't say it saved me, because that's quite extreme, but Wealth really helped me, because when Wealth first came around with SpaceX and Anthropic and some of these, super interesting deals, what I was doing is I put a handbrake on buying shitcoins, and instead of going to buy some more Link, and instead of going to buy some more Ethereum and Solana and whatever it may be, listen, I go a lot lower down the line than those, some very dirty meme coins as well. And I found myself kind of stuck in a bit of a loop thinking, well, things are down and I want to own these things in the long run. So let me just carry on every time I've got a spare $2 or $3 or $5 or $10,000 lying around. Let me go buy some more of these. And for me, how wealth really, really helped me was instead of buying more shitcoins, I started buying into these pre-IPO companies. And it's not like I needed to withdraw the money and send it back to my bank and then go and become an accredited investor and have a minimum of $100,000 in order to get into SpaceX. I could ladder in slowly. I could, I've got a spare $2,000 lying around. Let me go and, buy $1,500 of SpaceX. And then the next day, oh shit, there's only, $37,000 left. Let me accelerate a little bit. It looks like people are taking interest to this. Let me go put in $3,000. But it's all done within the same ecosystem that I like to trade in every day. I move, funds from my MetaMask, or I might sell a meme coin on Phantom, and then, I can just bridge it to base quickly and then go and buy a company that I really do believe and hope will be around for longer than, 3 months or 6 months. A lot of these tokens I was going into towards the end of like 2023, 2024, the promises were all there, but 3-4 months later, these guys were running out of money and, we've had to close the operation and blah, blah, blah. So that's how wealth has really helped me. It's kind of brought me down to earth a little bit more and made me diversify into companies that I wouldn't ordinarily go out of my way and have to, SpaceX, there was one of the banks, Investec in Switzerland. They were saying, yeah, you can get $100,000 of SpaceX through us. You had to go sit in an interview and tell them where you came from and who you are and how your financials are, and then you had to send in all different documentation. And it's, after 5 minutes, I would just say, I'm not doing this anymore. But with wealth, it really is the click of a button. It's like boom, 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 and then all of a sudden you own a piece of the company. And I sent it to one of my friends the other night, and I was like, hey, dude, like, can you just quickly go and test this out? Like, I just want you to go and have a look at the user experience. And he was like, oh, what is this? And yeah, sure, I'll do it when I've got time. And like for the next 3-4 hours, he was just explaining to me like how cool this is and how he wish he would have known about it a few months ago, because he wouldn't have burned so much money just buying shit coins. And I can't believe you guys have got Anthropic, and why is it available here on the secondary market for 600 billion when they just did around at 975? And it just is super cool, and it's super fun to go look at your portfolio and everything adjusts. Like as a new round is done with one of these companies, things adjust on your platform. It's I love wealth. It really, really is super cool. And my biggest wish really is that people can just get it in their hands. Like it's just an education process. It's like, have a look at wealth, play around on the platform, and once you've played around with it, it's super cool. It's like, oh, I've got a spare $200 lying around, let me go buy something instead of going to buy some crap. So that's what I love about wealth, and I really, really hope that more people experience it because it's super cool.
The only private equity deals I've done over the last 7 years or whatever have been seed early stage investing in companies that are that 1% or less chance of actually making it. But the kind of pre-IPO stuff I haven't done since Bank to the Future because I haven't had a way to do it. I mean, it's like I am an accredited investor, so I could technically go to these secondary market brokers, but usually their minimum ticket size is much bigger than I'm willing to allocate. Like usually it's like at least 100 grand or something like that minimum to go buy into these things. And a lot of the deals that I've done on wealth have been like 25 grand or 10 grand or 5 grand. And so I just wouldn't have been able to do it any other way. And so now it's available to me. And so it's a great platform and I use it all the time. and it just wasn't available before. Like it just couldn't get the stuff anywhere else.
Great, good stuff. We're actually almost at time now, guys. So thanks for all of the insights on private markets, SpaceX, Anthropic. We touched on a few other things, but it's just quite a landmark moment for us to be recording this, given that it's probably going to be the largest IPO in history taking place in a couple of days. And not that long ago, we were able to offer the ability to participate in pre-IPO for SpaceX at 470 billion. So what we can probably summarize a lot of this as is that the window has been closed for participating in private equity for most people for all time. Like it's never been open. And what we've seen now with wealth is that the window is open, and more people are able to join the ride of the companies which are shaping the future, having a massive influence on our society in general, and obviously generating untold numbers, like huge fortunes that are almost incomprehensible. But even when you hear Morgan Stanley talking about the numbers today, it seems that they're still undervalued remarkably, which is probably the hardest thing for me to digest personally, but also one of the most interesting things that I've understood from talking to you guys today. So definitely no financial advice, but I'm not going to be going to list my slices of Anthropic or SpaceX on the marketplace. But as John rightly pointed out, that actually is very valid, because taking profit and banking it is never a bad move in life in general, right? So there's never really a wrong move if you've made money. But just personally, I agree with John and Kyle in that these two companies are incredibly powerful still and have a lot left to do in terms of generating revenue and, of course, increasing in valuation. So I would like to think I'm still holding mine in 2-3 years' time, and we'll see how that plays out. But just a small recap for wealth users. If you're not familiar with the platform, what we do is we take positions in private equity companies through a real world company. We hold those positions, and then we offer a tokenized economic exposure, which basically means you have a legal and formal right to the liquidity or to the price performance of that asset. So without actually owning the asset, you own the value of the asset, I suppose, is the simplest way to put it. And that's a token that you get on the platform. And that token, or that investment position, that asset, you can hold it, you can wait for the IPO, or you can also then put it up for resale on the platform, like we've talked about, like a lot of users do. And if you're holding Anthropic and you do want to exit, Kyle's already told you he's very keen to come and take your position at anything less than 900 or even less than $1 trillion valuation for Anthropic. So that's the beauty of what is real now with wealth. We hope that it's just the beginning of something that is going to last for a long time, and we hope that it has been valuable contribution to people's investing careers, or even if it's a hobby, their investing experience in general. Is there any final words from Kyle or from John before we close this session and say thank you to the viewers?
Yeah, just before we go, there's two more things that I wanted to say. The first one was something that's super cool about wealth. It's one of the best features out there is if you take $1,000 ticket in Anthropic at 220 billion, you can actually break up your slice into 5 different pieces, for example. So you might want to, once it does a 3x, you might want to go and sell 1/5 of your ticket on the marketplace. So if it does 5x, that 1/5 will cover your initial investment. Now you're sitting with 4/5 of your original ticket size, and then you can do whatever you want. You can break it up again, and then you can start gifting it to your kids. So there's a feature on the app where you can send $50 of Anthropic to your nephew or to your uncle or your wife or whoever it is as a birthday present, or as a Christmas present, whatever it may be. That's a super cool feature that I use all the time. But the best part about that feature for me is, and I've done it before, if I put $5,000 into an investment and it does 3x, I'll go and sell 1/3 of my ticket just to get my initial back. And then, if the whole thing goes belly up 6 months later or a year later, at least I got my initial back and I'm free rolling. That's the same way that I trade crypto as well. And then I've got a question for you, Tim. And the question is, maybe you can just explain to viewers how exactly it works on a liquidity event. So, I'm a holder of SpaceX, for example. It's going public in, let's say, a few days' time. It's now trading. There's obviously a lockup. Most of these pre-IPOs have a lockup period. Some of them are 6 months, some of them a year. It all depends on from company to company. How do the liquidity events work? Do you have a choice to sell when you want to sell? Do Wealth automatically sell for you? And if that's the case, do you receive USDC back in your wallet? Do you receive stock or tokens? I think it's quite a good thing to explain to people, because a lot of friends and family have asked me that question before. I do know how it works, so I would just like you to explain it. And then also maybe touch on the feature when we do pay out in USDC, or however you explain it now, that there may be an option where you can rebuy that stock almost immediately, so that you're not sitting on the sidelines or you kind of feel like you've been forced to sell unwillingly.
Yeah, I mean, you pretty much covered it. So the process is specifically unique depending on which IPO it is. Every one of them will have preconditions for liquidity depending on the nature of the company and how they've structured the IPO, but they generally follow the same pattern, which is there's a 6-month lockup for investors and or a price performance target. If the thresholds are met on the price performance target, liquidity can come earlier than the 6 months. So it's either or. So there's a maximum 6-month lockup, and at the point of the 6 months, then there's a liquidation process, which is a real world legacy process, nothing to do with what Wealth does, but we basically activate all the steps on behalf of the protocol. So we will be taking the private shares, going into public shares, liquidating the public shares. There's no question about should we liquidate, should we not. It's just following a liquidation process. And then once the stablecoin or the USD, the dollar, is available, it then gets dispersed pro rata directly to the users on the platform into their wallets, at which point they will be able to click a button and say, I want to stay in SpaceX, for example, and they will then be able to purchase an on-chain public stock through the app. So they can stay involved in SpaceX even if there has been a liquidation, which is important from a legal and administration perspective, but it'll happen very smoothly. It'll be click of a button for a user. So that's the process. We will simplify it as much as we possibly can, obviously, but there's limits just because it involves some real world, legacy systems which are still operating similar to how they've always operated, which takes a little bit of time. But I hope that answers the question.
One last thing before we go, Timmy, have we got anything super exciting in the pipeline? Any new companies that are on our list that we're trying to target or attack, or nothing at this point?
Yes. A lot is in the pipe. We actually have a new feature coming on the app very soon, which is called Upcoming. So you'll be able to see what is upcoming rather than just see it when it drops. And an even cooler feature is if you're part of certain communities, you'll be able to go in and put a number in there that you want to have of that upcoming drop. So if it's something super exciting and you want to have some, you can actually whitelist yourself through the app. There's a feature coming for that too. So we're continuing to evolve the platform and the user experience, and bring obviously as many great companies to the app as possible. So there's a lot coming, John. Yeah.
Super exciting.
Great. Well, that'll wrap up then the first session of the Wealth Academy, and I think we covered a lot. But thank you very much, Kyle, for your time, and thank you, John, for your time, and look forward to having you on again soon.
Thanks, Tim.
Thank you.
See you guys.